Good evening to one and all present here. Hope you're all doing well. I am Kavya Serene. On behalf of Cerebro Kids, I take immense pleasure in introducing the speaker for today's session, CA Abhishek Gupta. Mr. Gupta is an expert in the field of business finance, financial planning, and accounting. He will be sharing with us useful insights in the field of finance. The topic for today's webinar is learning about finance. So let us fasten our seat belts to get a sneak peek into the world of finance with nothing but the expert for today's session. Thank you. Over to you, sir.
Hi everyone. Am I audible?
Yes, sir.
Yes, sir.
Yes, sir.
So how are you? How is everyone? Hope everything is fine at your place. Seeing. So are you ready to start your? Thank you, Arnav. So just want to know about what is my audience is like. What background they have? Like, are they college students or like school students? If few of you could message me in the chat box. Okay, currently pursuing MBA. Rakesh. Okay, BCom, BBA. That's good. BSc Agriculture final year. That's good. BSc in Bachelor's in Sports Management, BCom, BTech. Okay, so most of the students are from college or post-graduation students. That's good. So we have a wide appearance. So let's start. Just sharing my screen with you all. Is my screen visible? Hello?
Yes, sir.
Yes, sir.
Okay, thank you. So learning about finance. So any idea like what is your understanding regarding finance? What all does it come under finance, or what is the relevance of finance in a company or in personal life as well? If one of you could answer. So let me start. So finance is like it is the backbone of a company. So everything that a company decides, whatever a company, nothing can happen about finance without finance. So like um, finance includes my what is my so basic terminology. If you have any idea, like my assets plus my assets equals to my liabilities plus my capital in any company or in any financial institution or in any organization. If I say the basic term is same as asset is equal to liabilities plus capital. So we break what is my asset. So my asset can be anything like which can be measured in terms of monetary items. It can be cash, it can be inventory, it can be my debtors. If debtors, I say like what is my receivable from my customers, so that is also my asset. And if I say about liabilities, so my payables, like what I, as a company, what I have to pay my outsiders, that is my liability. It includes loans, it includes any debentures or bonds issued by the company. And capital is the owner's equity, like what so there's a concept in accounting which says the owner and the or organization are terms are separate, like their books are to be treated as a separate entity. So a company is a separate, and the owner of the company, or the we say shareholders, are separate. So what is the liability of the company towards the shareholders is separate. So that is my capital. Okay. So our today's topic is about finance. So I'll be covering around the personal finance topics. So what is my personal finance? Like how should one manage its finance, and how should grow in terms of his or her wealth? And okay, so plan your financial needs. So finance uh, needs include my what is my income, what is my forecasted income, or what is my potential of income, like how much can I earn from a like during a certain period of time. And corresponding to my income there can be certain expenses like day-to-day expenses, some like petty expenses, some small expenses that if I accumulate becomes a uh, big amount over a period of time.
Excuse me,
So
sir.
yes sir.
Sir, can I ask one question?
Yeah,
Sir, in the last slide, sir, you told that like your assets are equal to your like liabilities plus the capital, right?
yeah, right.
If we consider like the valuation of a company, that's also
Yeah.
the same as capital, right? Like the assets minus liabilities.
Yes, that
Then
is
sir,
the
like
definition of capital, not a valuation. So valuation depends on the what is my future potential of a company. So today's like today's company net worth might be 1 lakh or 1 crore or 1,000 crores, but its valuation depends upon the what is its potential to grow in terms of future. Like with the today's 1,000 crores of worth, how much multiplier can it be there? Like because companies are going like it's a going concern, so it will be earning more and more income, and there will be certain expenses towards that income, and then that is my valuation. Yeah, any doubt you have?
okay, like so how so, like I wanted to ask that how is like valuation different from this owner's equity?
So
That's what I
I
wanted to
told you,
know.
so valuation depends on the future, what is the future potential of that company. Basis that potential, that basis that research, the valuer of the company values what is the per share or what is the future potential of that company, and then accordingly investors decide that this is the potential, that this much I can this like by owning this company I can make this much amount of money. That is my valuation.
Okay, sir. Thank you.
So like planning your financial needs, so income has like you will over a certain period of time you will earn certain amount of income, and corresponding to that there will be certain expenses that you will be required to incur to earn a sustainable life. Okay, and then there will be certain expenses, or there will be, so income my expenses, there will be some savings. Out of that part of savings I'll be investing that money in certain bonds, equity, or like my fixed deposit as well. So that is my investment. Any doubt till that? Hello? Should we continue, or like you have certain doubt?
So please
No doubt,
continue.
sir. You can continue.
Sorry? Continue. Okay. So principles of financial security. So everybody needs to be financially secure. Like over a certain, like seeing the pandemic also, like some all many people have realized that there should be a financial security that should be insured. There, because any amount, any restriction can involve my financial instability, or like involves financial needs to be secured. So basics of recognizing my financial security are recognize your and appreciate your source of income, whatever source of income you are having. Like even if I consider my pocket money also, like it is a source of income for me. Okay, like I should appreciate this and accordingly utilize it. Not just like I have to incur my certain expenses that are part of um, that is a part of life, but I should be judicially utilizing it, not just wasting this money. So always limit your expenses, and I'll just advise that start saving at a young age, because like if you start saving at a young age, so you'll realize that your investment, that savings, your habit of saving grows multiplier. So you can start saving at a young age. Don't borrow with what you can't pay. Like just just because you think that you will earn in over a span of time you this much amount of money, so you just borrow that money. That is not advisable. Always rely on your sources of funds and don't borrow without what you can't pay. Always prepare a budget of your money. Like you just can't spend, or like always budget what is your this month's budget, how much you can spend this month and how much you're planning to save. And plus minus 5-10% is okay, but not more than that is advisable. Okay, so it's just a example that saving just 10 rupees a day can, like, how much you can earn by just saving 10 rupees a day. Like if I just save 10 rupees per month, like per day, I'll be saving 300 rupees per month. And if I invest that money at 10% per annum, how much will I be earning at the end of the month? So 201 rupees I'll be saving additionally. What like my initial investment was 3600, and if you see that saving just 10 rupees a day is just a minimal amount you can save, and you obviously can save this much amount of money, and you will be earning out of this. So if you say that how can I invest 300 rupees per day, so there are many sources of income that you can invest these 300 rupees also. So you can invest in like savings account, and fixed deposit account doesn't give you that 10% of return, but saving in some bonds, debentures, these sources of funds, I at this level I'm not advising you to invest on those risky funds, but just inculcate this habit to save. This way you can grow your money better. So investing in yourself first. So like I was saying that don't invest like right away, don't jump into those risky financial investments. First invest in yourself, develop your skills, what you can earn, what what you love to do is better. So like just follow your passion is also not advisable, because following your passion involves lot of like energy also, but do what you love, not just um, don't run after money, I'm saying that. But first invest in yourself, like develop your skills, like learn new things, learn compute, like uh, many of you would be joining new corporates, new industries, or some other institutions, organizations. So learn what you will need in future, like learn computers, learn Microsoft Office, learn like develop new skills. Don't wait for somebody to teach you. Like people will promise you that I'll teach you this nothing. So start by yourself. Don't wait for somebody to teach you. Build good connections. Like you are like seeing yourself you're in college. So build good connections, build like resourceful connections that will help you in your learning further, and then also in future also they'll help you to motivate, to provide you some guidance over the period of time, and and they will also help you in finding various sources of like various sources of what I say information, various sources of growing yourself, explore your interest. So like you're just in college right now, so you might not be knowing that what is best for you, what is good for you. So try different things, learn from people, and follow what you connect with. Don't just stick to one thing, like learn different things. Many times you will realize that this is not making sense, so it's not nothing bad. You'll gain experience, and always experience pays for you. Okay, nurture mind and body, positivity and mindfulness. So like I said, that don't be like hurt by the experiences of life. You'll all gradually learn new things. You motivate yourself to try new things. Like if plan A doesn't work, always plan B is there, and if plan B doesn't work, plan C is there. So try different things, motivate yourself. Motivation is nothing that somebody else is going to give you. So always have positivity in mind. So if you have interest in investment, or like you want to, you have certain good things, like you think that this company is doing good, so go and research about that company. You think that this technology is going to work, this technology you feel connection with, so go and research about that company. So there are various sources that are available right now. So with YouTube, with Google, with various sources of information, you can research many things. You can grow yourself, you can explore new things. So even if you don't go, like many people come and like this cryptocurrency is a hot topic, so many people think that cryptocurrency is good. So before judging that this is good or bad, explore about it, research about it, and then if you feel that this is good, and then you can make groups among yourselves and discuss that this is a good topic, that we should explore about this, what are its benefits, what are its demerits. This, I'm not saying that you invest in this like risky assets, but growing your knowledge will only help you to build connections, and then also it will help you in your experience, like corporate world also. Like people will think that you are uh, ready to explore new things, you are ready to make investment in yourself, make investment in your knowledge, so that way you can grow yourself. Okay, so and third thing is exercise and daily workout. It's also like due to pandemic, so it is a problem right now, but I would advise that daily exercise and daily workout will help you much, because it creates a positivity around your mind, and then keeps you positive daily, on a daily basis. So like people say that oh, this is only, I could finish this much amount of work, or I could learn this much amount, only 1% I could learn, only this amount of work. So nothing bad in that. Only like 1% improvement can like grow you 37 times in a month. 1% improvement daily can grow you 37 times in a year. So that is the like best opportunity that we have. Like um, so currently you are in college, so you have much more time, but once you enter the corporate, or once you enter the industry, you will realize that there's not much time. So currently I would advise, utilize your time wisely, and then grow yourself. So many people like just like me, so I was, when I was young, so like people, I used to say that I don't have time to read books, I don't have time to read newspaper. But now I realize that that was the time that I could focus myself on more on reading books, and if I could have developed that habit at the time, I would not be facing much problem later on. Like developing a habit later on will is a problem. So it's better to develop good habits at the beginning and avoid bad habits at the later stage. Okay. So use your attention wisely. Once you open like internet, so there are plethora of distractions are there. So don't forget why you started. Focus on what you are doing and what you want to do. So remember your objectives. Why did you start? What you wanted to do? What you are doing, and be conscious about what you are doing right away. Don't just jump into whatever is like given to you. Think what you want to do, why you want to do, and accordingly you plan what is your action. Okay, be aware and remember why you started, what you started, and then whenever you feel like this is not making sense, so just remember that why did you start, what was your motivation to start that, um, and always remember that once you realize that this was my main goal, this was a main objective of starting uh, anything, so you will yourself find motivation that now no, this is what was meant to me and I want to complete this and I have to do. Just leaving that thing will not make sense. Always remember that you complete your goals, and once you complete it you will feel that you are more positive. uh, your outlook will change that you can complete it. Okay. Any questions you have? Hello. Hello. Was it so boring or hello?
Yes,
No,
sir.
sir, it was actually motivating. So,
So what topic you want me to pick up like right away? If you want, we can pick from that topic. We want like I want to make this session more interactive, more like that can help you in growing you or like related to finance. If you have certain doubts, you want to think that this you need more clarity. Like someone said that why what is the difference between a valuation and what is by capital? Any suggestions? Okay, specialization of in finance during MBA. That's good. Okay, so if I talk about MBA, so it is about management, like managing your business, managing about your finance. So one specializing in finance needs to understand what are my basics of finance. So like basics of finance involves like what is my asset, what is my liability, and again that is my capital. But break that asset into certain things, like asset in has all two components: fixed assets like long-term assets and my short-term assets. So like long-term assets, fixed assets, so they involve depreciation. Like short-term assets involves liquidity. So not all fixed assets involve my depreciation, but if am making an investment, I'm incurring certain amount of expense right away. That is my capital expense. But over a period of time, I would suggest that like as a company, I want to recover that mm, mm, investment value uh, throughout a period of time. So if I'm spending 10,000 rupees over a machine that is going to work for 2 years, so I would recommend to recover 5,000 rupees every year from that machine. So accordingly, while making a profit and loss account, so I'll recognize 5,000 as my expense during the first year and 5,000 during the next year, so that I can judge my income and expenditure accordingly. Okay, and then comes my return on investment. So whatever I am earning is not my income. Like there will be certain expenses that is required to be deducted from that income or revenue, if I say more precisely. So what is my net profit? How, like if I'm making 10,000 rupees, that may be a huge amount for someone in, and that may be a lower amount for someone. But this all depends on two things. What is my investment initially? So if I'm just investing 1 lakh rupees and I'm making 10,000, so my investment rate is 10%. So return on investment is 10%. But if I'm investing 5 lakh rupees and making 10,000 rupees, it's just 2% I'm earning from that income. So that is not like if I compare two companies, one making an investment of 1 lakh rupees and earning 10,000 rupees, and another making an investment of 5 lakh rupees and another making 10,000 rupees. So I would prefer to go with the company one that is making more return on investment. So company like startups always grow in the sense that they first have a lower return on investment or negative return on investment, but gradually they want to stabilize their business and then grow accordingly and improve their return on investment. So this is the objective of any company, to grow in terms of its shareholders' wealth and its profit. Profitability is not always understood in the terms of absolute terms, but in the terms of percentage as well. Okay, and then my return on investment also has two components. What like return I'm generating for two people, like either my lenders or either my shareholders. So what return I'm giving to my shareholders is will be making more sense, because debt I have to incur any case. So even if I'm earning 10,000 rupees and I'm taking a loan of 10 lakh like 10 lakh rupees at the rate of 12%, I have to pay 12,000 in any case. Even if my capital goes in negative, I have to pay 12,000 rupees to the lender. So even if my profit are 10,000 rupees and insufficient to repay my debts, I have to pay 12,000. But what will be making more sense is to generate such amount of income that I can repay my shareholders, which are taking more risk on me and then investing in my company or myself. So that way one has to maximize the shareholders' wealth. So one of the principles of finance includes maximizing shareholders' wealth as well. How is NPV helpful while investing? So NPV is present value of cash inflow and minus present value of cash outflow. So before understanding what is my present value of cash inflow and what is present value of cash outflow, let's just understand what is present value. So time value of money defines what is the present value of 100 rupees that I'll be receiving 1 day later, one month later, or 1 year later. So if I have 100 rupees today, and if I'll be receiving 100 rupees 1 year later, so like if I ask you, anybody, if you could answer, so whose value will be more, 100 rupees today or 100 rupees 1 year late, receiving later, 1 year later?
So currently,
And the reason being
so
inflation. So one is inflation plus opportunity loss. So if I'm having 100 rupees today and if I invest this 100 rupees at the rate of 10% for 1 year, I'll be having 110 rupees 1 year later. But if I'm receiving 100 rupees 1 year later, I'll be having just 100 rupees. So that is 10 rupees of opportunity loss is also considered during time value of money. So even if my inflation rate is 6% per month, which is expected to be like over the next 1 or 2 years, inflation is going to increase. But there will be opportunity loss also that I'll be having apart from inflation. So if my safe investment can earn 10% per annum and inflation is 6%, so 4% is my opportunity loss as well. So converting that 100 rupees receivable later on to today's value is converting that 100 rupees value into present value. That is the present value. Okay, so if I am making an investment in a machinery or in a project of 10 lakh rupees, that is my outflow right away. So that is my present value of cash outflow, like today's value of that cash outflow, that is 10 lakh rupees. And there will be certain incomes that I will be earning from that project over a period of time, let's say over a period of 1 year, over a period of 6 months. So whatever in amount that I'll be receiving, discounting that amount into today's value, to convert that amount into today's value will be my present value of cash inflow. So discounting is basically converting that 100 rupees that was receivable 1 year later into today's value. That will be like 90 rupees 91 paisa at the rate of 10%. So if I take the discounting rate at 10%, so receiving 100 rupees 1 year later and converting that 100 rupees 1 year later into today's term T0, if I say time value 0, is 90 rupees 91 paisa. So that is called discounting. So NPV is that what is my what I'll be making money from that project is my present value of cash inflow minus project value of cash outflow, basically. Hope that was yeah. Whose doubt was this? NPV. Karen. So is it clear, Karen?
Yes, sir.
Does pursuing MBA from tier 3 or tier 2 college make difference? So basically, like I have not done MBA, so I'm not right to give that answer. But seeing this MBA thing, so I'll suggest that you reach out to someone who has studied MBA, like tier 3 or tier 2 college will make a difference. So, but I would suggest that always target a good college, and even if you're not getting into a dream college, you will be getting placed at a good level because you had prepared for that dream college, and then you're not settling for a less, you're just settling at what is good. Okay. But always target good, like always target the best, because accordingly you will prepare and give your best shot. Any other topic that you want to cover, or proper management? Can you explain IRR? So IRR is internal rate of return. So if I'm investing in a project of 10,000 rupees, I'm making 1,000 rupees first year and 1,000 rupees next year also. For investment, internal rate of return defines what is the rate of return that I'm generating from that project. So 1,000 rupees first year is my 10%. But next year also 10,000 rupees. So converting that 1,000 rupees also into today's value will be giving me a present value, and then accordingly I'll compare that with my cash outflow that I'll be generating for and getting the internal rate of return. So fixed deposits are considered safest investment, but that is also as rightly said, that banks are in loss. So is it right to say that fixed deposits are safer investment? So banks generally have an insurance that if you're keeping your money even in savings account, that is also not safe that run into loss. But banks do have an insurance around 5 lakh rupees per customer they have. Even if you have multiple accounts in one bank, then also your limit is 5 lakh rupees only. So they have insurance. So even if something happens to bank or bank doesn't work, you will be repaid till that 5 lakh rupees. What should we analyze while buying a share? So you should analyze what is its compounding growth, what is the management objective. So I'll suggest that don't just jump. Since you are in college, you can try your knowledge, but don't don't invest much amount of money into shares. First learn and then earn. That is the objective. So like while buying a share, analyze what does the management do, what does the company do, what are its potential, what is future plan. Is the company run by professionals or the promoters only? So if it is a promoter driven company, so there are high chances of mismanagement and then like frauds also. If you go through, follow some news channels, not news channels specifically, follow some good applications such as money control. Be aware what the company is currently doing, what are its future potential, like future plans to grow, and study about its financials. What is the return of investment, what is the return on equity that the company is generating year on year, and what is the dividend yield that the company is offering. So there, what is the brand value of the company? That is also some like very much of good insight, because if a company has a good brand value, there are very minimal chances that a company is a fraud or like so just because a company share has like turned 10 times, 4 times, like any times, doesn't make that company is a good in company. Maybe there are certain chances that the fraud in the company is going on, and the like it's just um, company shares turning manifold just because there might be many chances that the companies itself is involved in rigging those share prices, or there's no volume in the company, or just it's being made a lucrative investment, and once you make the investment then you realize that that's I'm not able to exit from that investment. So you need to realize that if you are making 100 rupees, it is also as good as you make return and then return your capital as well. If you are not able to liquidate those shares, that is a problem. So always invest in good companies. So start, if you want to invest in shares, so don't just start right away. Make small amount of investment, what you can afford to lose. That even if कि मेरा 100 रुपीज का लॉस अगर हो भी गया तो मुझे कोई फर्क नहीं पड़ता, मतलब that much amount of money. Even if you think that this 100 rupees is 5,000 rupees for you, so 5,000 rupees का इन्वेस्टमेंट अगर चला भी गया तो मुझे फर्क नहीं पड़ता, ठीक है मैंने रिस्क लिया था. बट always learn, like even if you're losing that money, remember that why are you losing, what made you, what could have happened that you could save that money. That is mean learning is the best experience, I would say. We can invest our money in future. So there are many investment opportunities that come up, like in safest are public provident fund, like fixed deposit. But being an finance professional, I would suggest that start growing your knowledge. Like start like I don't recommend to start investing in shares, but I would suggest that understand how does the stock market work, what are its challenges, what are the new learnings that people make, what is going on in the market, or how is the industry functioning. So even if you follow one company, so start following how does that company work, what are its, how does that company's competitors work. Accordingly you can start, you will build your knowledge, and then you can make a decision that you can, if you start investing in shares, or you should invest in debentures, or you should investment in mutual funds. So mutual funds are safer than share market because they are being managed by certain professionals, um, having wide experience in the finance field, and then managing those your funds wisely. So you can have the track record of that mutual fund company. Like there are many mutual fund companies, so State Bank itself has a mutual fund or trust, so you can like invest your money through mutual fund also, like, and then track your investments and understand why it is making more sense to invest in mutual funds or should I invest directly in shares, or should I go through more safer investment in debentures or bonds? Okay, what do you think about SPACs? Are they good to investment? SPACs as in like, if you could let me know like what is SPAC? Its full form, anything else? Special purpose acquisition companies. Okay, so special purpose acquisition company depends like what are they doing, like special purpose, what is the purpose that it has been formed for. Like if I'm say that there's a bad bank that is going to be formed that will take over the bad loans that bank has, so it is a ARC, like asset reconstruction companies that are there, so to realize that bad loans. So I'm unaware about the special purpose acquisition companies, but if I'll check what is it. Okay, is HDFC Bank. So Karan, apologies, I don't know about special purpose acquisition companies right now. But certainly it will depend on the purpose of its formation. Is HDFC Kotak banks running with profit or preferred to government banks for FD safety? So FD safety, I told you that it is always good to analyze, like it is also investment. So all banks have a insurance, but it is, you can invest in HDFC, Kotak or government banks also, but first understand what return they are offering. Like they can be a 1% or 0.5% change in these banks in FD. You can like, but these are government banks. You can understand that privates do have many loopholes, so they can be like personal involvement of the owner. So understand like HDFC Bank is professionally managed bank. You can invest in that bank also as a FD. Generally, there is no risk that bank will fail and then you will realize that your money is gone. They do have insurance and your money will be safe. But it is always advisable to invest in government banks because you are already aware that Yes Bank fiasco, etc. have already ruined lots of investors' money because of the owners' involvement. The funds of mutual funds are also invested in share market. Yes, the funds of future mutual funds are also invested in share market, but mutual funds are managed by some professionals. So they have an experience of around 15 years, 20 years, 5 years. They understand how does the dynamics of the market work. Because if I say about myself or my like even a person who is having 10 years of experience but not in stock market, he will be having more experience than us, but he may not be as good as a professional whose day in day out is around this stock market, because he has other work also, like he's involved in some company or he's doing his job also. He is not day in day out the stock market, but he has a good knowledge about how does the dynamics of the market work. So if I say example, so like there was a time that like stock market was growing, but stock market doesn't grow, like every stock is not growing. So you have to make your investment wisely, that which share has a good potential that is growing and why is it growing. So that involves a lot of study and that involves a lot of experience that will help you analyze that it's it good to invest or is it just a fake, like don't just run in stock market because it has its own risk. So just if you invest 5,000 in mutual fund, somebody has managed your 5,000 rupees. So you can comparatively invest. So if you have 5,000 rupees, you can invest 2,500 in mutual fund, 2,500 by your own. You realize that your money will be growing much faster in mutual funds, and your in share market will growing. Your money will be growing at much lesser rate. because of the experience. Like mutual fund managers have a good experience in managing your funds. They have they are not managing only your funds but also many other funds as well. Uh,
Sir, I have a question.
yeah, yeah,
Let's
Harsh.
say the first question itself. Sir, like the assets equal to liabilities plus owner's equity.
Yeah,
Sir, here the owner's equity refers to the promoter's equity, right?
not only promoters but also the owner, like promoters plus other shareholders. So shareholders have many, like there are many shareholders, not only promoters.
Yeah,
Uh, so there will be public holdings, there will be
yeah,
mutual fund, there will be domestic financial institutions or foreign institutional investors that are investing in that company.
yeah.
All these all together make an owner's equity.
So, sir, means to say, like, sir, let's say the market cap of a company is, let's say, rupees 100. Okay.
Yeah,
So here the owner's equity will be rupees 100. That's what you're saying?
yeah. No, no, not this. So market cap is not the like market capital is the valuation of that company. But if I say what is the book value of that company, will be will not be equal to 100 rupees, but it can be lesser than this. So how should I give an example? Market capital depends on the future potential of that company. So if I say that 100 rupees of like 100 rupees paid up value of a share of a company might be selling at 1,000 rupees. So that 1,000 rupees defines the market value, market capital of the company. But 100 rupees defines the book value of that company. That is equal to the owner's equity. That 100 rupees.
Sir,
Market
market
capital,
cap is, sir, market cap is, sir, the number of shares, okay, into the, the share price of the company, right?
share
How is it
price
equal to
at
that?
the
Yeah,
market value, right?
yeah, yeah, correct, correct.
But if I say that owner's equity is always at the book value of the company.
Sir, what is the book value then?
So book value can be the paid up value of the shares of the company. So the paid up value can be 10 rupees plus my into number of shares plus my reserve and surplus.
Uh, okay.
So uh, if I could open just one or two, one second. Give me one second. I'm just referring to our annual report. If I could show you what is the book value and the market value. Okay.
Sure.
my screen again with you. So my equity is this much. So this is the annual report of Indigo Interglobe Aviation Limited, Indigo Airlines. So the total equity is 5,862 crores. So it is in millions, in like, rupees in millions. Okay. So 58,624 millions is the owner's equity value of the company. So if I have to compute what is the market value of that company, it is this number of shares, like 38 crore shares into my market price of the share. So into 1707. Okay, so we can compare this also. 384. So this is the value of the company. Right. So 65,000 millions, and my book value is 58,000 millions. I hope I was clear, Harshit.
Sir, why not they both are equal?
So these both are not equal because of the earning potential of, like, what do the shareholders believe that this is the value of the company that will be earned over a period. Okay, so this is the main reason that these are not equal. Plus, market value of the company, market price of the share of the company keeps on fluctuating day in day out due to the instability in the economy or like various other factors, and the shareholders' perspective around the company. But the book value is dependent on the profit earned by the company over a period of time. So, like, it doesn't change day in day out. So that is the reason that it is not equal.
Okay, sir. Got
Crypto be considered an asset class in India. So this is like crypto, considering crypto as an asset class is something that will involve some legal considerations also, because this is decentralizing the whole currency and monetary items, that I do not think that government will be taking so much of risk, because it involves complete decentralization. And then this also, if you are aware that no record, the government cannot regulate this type of market in current situation, and this may involve like funding of the illegal activities also, like if you understand, like payment to illegal activities for illegal activities. It is it is it good to invest in IPOs? Is it good to to just invest in IPO? I would suggest that understand what does the company do, why does it do, and how does it do, and what are its competitors, how much revenue it is generating, how much return it is giving to the shareholders, what is compounding annual return, that is what is the potential of that company. So don't generalize to invest in IPO. People do make money due to investing in IPO due to the listing gains, but that is always not the case. There have been certain cases that IPOs were overvalued or IPOs were listed at a discounted price. Suppose the IPO in like initial price that the company was offering to invest in that company was 300 rupees, but later on people were able to make money by investing at 300 because it was listed at 400 rupees. But there can be case that instead of 300 it may get listed at 250 rupees also. So don't just invest in IPO. If you believe in the like policy of the company, if you connect with the company, then only make a judicious judgment to invest in that IPO, but don't just generalize that investing in IPO will be making money. Like there have been certain cases that IPOs are governed just to raise money and people are not able to earn or their investment is duped. So I would suggest to just research and then only invest. Any idea by which I can specialize in finance? Basically, I'm weak in accounting. So, like, um, uh, I would say that accounting is a essence of finance, but you can learn it, like, learn about finance by with the help of your friends, connections, by research. Like, um, finance is not only accounting, but finance is much more than that. But it involves accounting, understanding of accounts as well. So I would suggest that start by bit and slowly and gradually you'll learn about finance. So as of now, I don't have the clear answer. How can you start specialize in finance, but learn through good, like learn from your friends and then start. I would say that research more about what does the company do, how does it do, and accordingly you will understand. You will build your understanding about finance, but uh, I don't think that being weak in accounting is a concern. You, if you understand that you are weak in accounting, you understand that how you want to grow. Okay, how GDP of India can decide economy of our country since it is falling? Will it affect the USD to INR? So for sure that USD to INR, like if the GDP of one country is falling and its currency may be devalued, but it all depends on the future potential that of the country also. Like if my GDP is falling just because this is just because of this pandemic, but if my country has a potential, if an economy has a potential to grow at a larger scale, then I do not think that it is a major concern that we should be worried that GDP of India is currently, like if it is falling at a faster rate, but it will grow at much faster rate because it has the potential. It may or may not affect the USD to INR because USD to INR is dependent on various other factors also, not only the economy. It also depends on the supply of the USD, and then value of the Indian rupee depends on the, just like the share of the company defines the potential of that company, the currency value of that company also defines the economic of that country. Okay. Are convertible bonds trustworthy? See, it all depends on, like, investing in bonds, investing in shares. It all depends on the potential of the company. If the company is good, anything is like, its convertible bonds is as good as investing in its equity. So it is good to invest in those companies just that has a good future value, that has a good potential to grow. Okay. Any other doubt or any other topic you want to discuss? I hope the session was helpful to you, and I was able to make some sense on your.
Thank you, sir, for such an enriching session. I'm sure all of us here have benefited from your true insights. And thank you, audience, for being such a lovely. Thank you, audience, for such lovely participation. I request you all to please fill the feedback form given in the chat box. Thank you, sir.
Thank you. Thank you, everyone. Thank you for joining.